Hello, I'm Toycan, welcome back to what I hope will be a series of finance and money videos here on the third channel, because when finances are spoken about in real life, they tend to be done so in misleading at best and straight up false at worst ways. I feel like it's something we should do more, and when we do talk about things like taxes, we do so in such politically charged ways where we're not trying to inform people, we're trying to convince them to switch to our side. So that's what leads to so much of this misleadingness, and when it comes to finance on the internet, you tend to get lots of people really just pushing their way of making money by tricking you into thinking it's all about you. But no, this video has no sponsors, there's no ulterior motive. I just want to teach you about tax and to dispel some of the myths that, people will tell you that will try to make you make less money by tricking you into making think it's something for you. But no, that's not how these things work, and let me explain what I mean by that, because a lot of people, when they look at the graph of how much you pay in tax, because income tax is the most common form of tax, both in the UK and the US, when people say tax, they usually mean income tax. But yeah, a lot of people will try to convince you that, like, oh yeah, the way that tax works of all these bands, because from $0 to $9,700 in America you pay 10%, and then from $9,701 to $39,000 you pay 12, and then 22, 24, 32, 35, 37. A lot of people will have you believe, and this is something I've literally heard employers telling their employees in my life. Like, one of my friends was like, haha, thankfully my employer paid me a bit less so I'd go under the tax band. This is something I hear people thinking that, like, oh, if you earn $9,701, then you'd pay 12% tax, whereas if you earn $9,669, you'd pay 10%, and therefore the tax would be less, of course. Especially when you look at this, like paying 12% on $39,000 sounds way better than paying 22% on $40,000. The numbers are significantly less, but that's not how tax works in the slightest. These are marginal income tax rates. That means that you pay tax on the marginal band that you get into. So your first, we'll use the UK as an example, your first £12,500 are tax-free. You don't pay any tax on them unless you earn over a certain amount, but we'll leave that to the side for now. The first 12,500 is 0%. From 12,501 to 50,000 is 20%. This means that if you earn £12,501, you would pay 20p of tax, in income tax at least, because you'd be paying the 20% rate on the £1 above 12,500. You don't pay 20% on the entire lot. That would mean that there would be a £2,500 incentive for you to pay this tax instead of this one. And this is something that so many employers will tell you, and like maybe they even believe it themselves, but it's not how this works. And the reason it doesn't work that way is because otherwise everyone would be like, yeah, I'll stick at 12,500, or yeah, I'll stick at 49,000. Please don't pay me 51,000 pounds. It sounds like a thing that would, of course everyone would do that, and the government doesn't want you to make less money for the sake of paying less tax. Every single tax system in the modern developed world, the US included, surprisingly, will actually have a big incentive to you earning more money because you pay marginal tax rates on the amount you earn after the extra dollar, after $9,700 or after $510,000. And although these aren't all the taxes you pay in the US, because there's obviously state tax, and although this isn't all the tax you pay in the UK, because there's national insurance, let me prove this point is correct. Because if we go £49,000 a year, the tax that you would pay, by the way, it looks like it's expired, but if we earn 49,000, we'll use the UK gov.uk tax calculator. This is the government themselves telling this a thing, so we're knowing that we don't have a tax code, and also we don't pay Scottish income tax. You can see how using this stuff right here, we would be paying £7,298.20 in tax, whereas if we go back and we alter that to 51,000, which according to this would be above the rate, then what we would actually be paying here instead, as you can see, instead of going up massively, we'd expect a tax increase being huge. It's only a modest, £700 increase, and national insurance rates actually go down at a certain point. But basically, as you can see, we took home more pay by earning more money. That is the way that it works in most parts of the world. And if we go back to like 49,500, you'll see how getting paid less will not result in us being paid it's actually showing up the same number, it seems like, for some reason. But it doesn't result in you being paid less, ever. With very, very, very few exceptions of benefits around the world, that's not a thing. And then that's how tax works, right? Okay, these are the tax rates. It goes up to 45% in the UK, up to 37% in America, and in your jurisdiction, it may vary if you don't live in one of those two places. Like in Scotland even, it's 46%. But like, here's the thing, a lot of people think that tax rates, like, on your income, which by the way is like the biggest single source of tax, but not the only tax, I should say. Like, oh yeah, but the thing about this is like no one really pays that because of exemptions that I can't get. Anyone is entitled to the same tax exemptions. This is another thing that people will push as like, well, there's all these exemptions for this and that, and there are way too many exemptions, but anyone can be entitled to most of them, with exceptions for things like farmers, and if you're blind, you get an extra tax allowance in the UK for reasons I still don't really entirely understand, because most of the time you give benefits, but for blind people, it's a tax exempt. You get a higher personal allowance if you're blind, because, you know, whatever. Also, if you're a vicar, there's different rules, but assuming you're not one of those professions, everyone is entitled to the same things, which are things like tax credits if you have a child, if you earn a certain amount. There's obviously different types of benefits that work as tax credits as well, but the biggest one, the biggest individual source of people paying less tax than they should is pension tax relief, and this is something that's actually capped. So it's mostly people who earn the lower rates that can do this. You can pay no tax on income if instead of taking that income and spending it on things like, you know, I don't know, Toy Cat videos and McDonald's fries, instead of you know, actually having that money yourself, you put it in a pension pot, which is something you can negotiate with your employer. Instead of paying 20% on that, you would pay no percent. Or if instead of paying 40% on it, you'd pay nothing. You can reduce your taxable income, say from 50,000 to 49,000 in this example right here, but you can do that using your pension, you know, by putting money into a pension, because the idea is that you pay tax when it comes out in the end, and the idea is the government wants you to have money in that pension because, you know, there's a big pension poverty problem that, around the world, where people just don't put money in there. People just don't assume they'll be alive in 40 years, and then they realize that they can't work, and they're like, hey, I guess we need to do that. So, given that that's a big problem, governments around the world will give you big tax reliefs for that, and there are so many tax relief things you can do. There's a, you know, look it up if you want to find things for your situation, because most people, you know, can't take advantage of the dividend allowance, although it's £2,000, it's pretty good, or the capital gains tax allowance in the UK, which is surprisingly high, actually. Fun fact. But like, a lot of people can't take advantage of all of these, but there's something you can take advantage of. If you want to reduce your taxes, you don't have to be a mega millionaire, you just have to know how to use Google and know how to do things. Speaking, by the way, of this, I should just really, I guess, mention, like, reducing your taxes isn't immoral. A lot of people will be like, well, I would do that, but I'm not going to steal from the government. One, I mean, again, when you put money in a pension pot, you're not actually, you're doing something the government wants. They are the ones who write the rules about how this works, and they want you to have money if you have a child, or they want you to have money, you know, to put money in your pension. These are things they want you to do, and even if you think it's immoral, even though they're the ones writing the exemptions, maybe you know, this figure will help you right here. In the UK, it's similar to lots of other countries. Income tax is the largest single source of tax because it's inescapable. You earn income in the country, you pay tax on it. And also national insurance, I'd argue, is a source of income. But there are loads of other taxes you are paying. Income tax is not the only type of tax, yeah, again, most taxes aren't income tax, and most revenue from those taxes is not income tax either. So yeah, not paying tax is something that, like, people like to say when you're not paying that source, and that is definitely the most egregious tax that I would love not to pay too. I feel you. I would love not to have to pay that income tax. However, not paying it still means you're paying most of these other ones, so not paying tax to describe this little bubble is a little bit of a misleading phrase that people use all the time, especially if by not paying tax you mean paying less tax than you otherwise would. But anyway, it's just a weird semantical debate. There's lots of taxes in countries to do all sorts of things. Most of these other taxes are on things the government wants you to do less of, ideally, or that they think they should be taxing. You know, there's a lot of examples of that, duties on cigarettes, petrol, or, you know, drugs and stuff like that. But yeah, usually what governments do is they tax things they want to decrease, and they obviously subsidize things they want to increase. But in the case of income, they tax the thing that literally makes the country run because it's easy. And we'll talk about that in a second. But first of all, another key thing to mention, because a lot of people will have this big misconception thrown in there. In the UK, the US, a lot of other countries, you can read about it in your own country, there is something called a tax refund. And I know this from American TV that people love their tax refunds. It's like free money. And I've spoken to a lot of Americans who are like, yes, can't wait till April comes around because I'm getting some money from the government. And I want to be very clear right here, because the average tax refund is $2,913. A tax refund is not free money. A tax refund, get this, is when the taxpayer is, you know, pays more tax than they owe, and you're being refunded for the tax that you paid that you shouldn't have paid, usually with no interest to you. It's just money you're giving to the government, and they're realizing, oh, this is more than you were meant to pay, because, you know, you're already paying some sizable amount, it seems. It's not free money in the slightest. It's money that if you file your taxes correctly, apparently 77% of people do that incorrectly, then you will not receive a tax refund. Even though a lot of people do it as like a weird saving plan, like to get the money back, the reality is, if you do what we've suggested before on this channel, if you put that money even in a bank account, but realistically in savings, in you know, stocks, whatever else, you can make a lot more than just your $2,913, because it can accrue interest throughout the year. Also, yeah, you shouldn't need the government to be your savings plan. That's a terrible source of throwing your money with someone. It's just not a very smart idea, and it's not free money. It's your own money coming back. And if you can't budget the money so that it feels like free money, then improve budgeting. Maybe that's a thing we could talk about on this channel. But yeah, just a key thing I feel like we should mention. And the final thing I want to mention right here, because since, you know, income tax comes up so often in political sources, I just want to mention the key facts on this so that you can know, like, okay, here are the tax bands, right? Like, it goes up to 45% in the UK, it goes up to 37% in America. Just for the sake of completeness, because I find this interesting. When it comes to, like, if you look at this map right here, like income disparity, income taxes are only taxing income, and people think like, yeah, let's tax those people earning over $500,000. You know, let's get the 1% at, you know, the highest percent we can. However, when you tax income, you're not taxing the richest people, you're taxing the highest earning people. I'm not going to say there's a correlation between high earning and hard work, because you can decide that for yourself if you think that's true. But if you look at the like the graphs right here, the income disparity between the top 1% and the bottom 40%, you know, it's pretty level. Whether you think this is right or not is up to you, but it's the wealth disparity that people think is staggering and that is always growing, because you tax this, you know, the way that you create wealth is it's your leftover money after you've paid all of your, you know, your bills that are due, whether that's rent and all these other things. But also, you know, once all your outgoings are gone, your savings are what eventually become wealth. By taxing the amount of money, you stop that becoming wealth. By effectively, you know, the reason this can get so much bigger is because income is the way to make more money, right? Or at least the largest way. Technically, your money can make money, but that's a whole weird side tangent. The people who are trying to make the money to become wealthy is what you are taxing. You do not tax existing wealthy people in this way. You tax existing wealthy people. It's actually a very hard thing to do, because if you use a wealth tax, then it's, in every country it's been tested, it causes capital flight. But long story short, taxing this creates more of this, not the other way around. If you, in the long run, you know, if you lower taxes, it might create more of this. You could argue if you only reduce taxes on the higher earning, but all taxes all income tax, fundamentally speaking, as it works in the modern world, decreases the earning thing, not the wealth thing. Which is, maybe if you hate people who are wildly wealthy and are born into wealth, you can't tax their income because they don't need or have much income. They're already, whatever, it's a whole thing. Also, just for completeness right here, people assume like, oh yeah, income tax always has been, always will be. And, you know, I kind of understand, like, in the last 100 years, the modern world, taxes always have been and maybe always will be. But it's worth mentioning that the taxes have actually only been around for, like, again, modern income taxes. There was one in Egypt or something, and, like, there's a lot of historic examples of income tax, but the oldest income tax, for the most part, of that's kind of modern, is only 210 years old in the UK, where we abolished it, and then we got it again. And if you exclude that, you can see how, like, oh yeah, the US had an income tax only in 1913. Australia's income tax started in 1916. China only had an income tax from 1937 onwards. Apparently, Uruguay only introduced their income tax 13 years ago. It's not a necessity to government. Government has many other sources of revenue, and these sources of revenue, with the exception of VAT, which is in Europe, it's a tax on just buying things. You probably don't want to decrease consumerism, although you could argue we've got too much purchasing, so VAT is a good thing sometimes, maybe. But income is just, you want people to earn money and do things. Why are we taxing that? We should be taxing all these other things. But again, people turn the debate into these tax rates. Like, even though, you know, the most left-wing of parties will be like, no, higher tax rates, only while talking about income tax, never talking about the capital gains and the other types of tax in this way that could actually be effective. And, you know, why is that? You tell me. But I just want to mention that when people talk about raising or lowering these tax rates, they're not talking about the wealth issue, they're talking about the income disparity issue. Or, realistically speaking, they're just talking about, like, hey, we'd like more money to do things that we want to do. whatever pledges they've made or whatever. And that's something that's key to mention. Also, just because I find it interesting, to be fair and on balance here, marginal tax rates have been wildly high in past. The fact that it's only 45%, admittedly, that's better than it has been. In the UK, it's 45. In the US, it's 37. But you can see how, like, historically speaking, it got up to, like, the 90s during the war when everything was being thrown at, like, we need to do this. So, yeah, fun fact. Also, you can see how, like, the UK and the US, like, kind of follow each other. Like, in the 80s, both countries had a very right-wing surge, which led to lower taxes on the rich and on everyone in general, because the lower tax rates moved to. I find it interesting to see the blue and red stay together and yellow and green stay together. Isn't that cute? We can make a geopolitical point, but it's not the second channel, it's the third channel, and I'm just here to mention, never ever be told by your boss, your employer, your dad, your mama, your tax planner, that earning more money is a bad idea, because in modern societies, again, I'm just going to assume an EU country or the US, or Canada, Australia, something. That is not the case. Also, tax refunds are your money. Check into what you're doing wrong if you keep getting money every year. Admittedly, it's better to have money come back to you than money go that way. But if you follow my investing video, then you'd know that money that you get a year later is worse than money now. Money now is worth the most. Money later is worth less. And that's how investing works, by taking advantage of that, by borrowing money. Whatever, it's a whole thing. You could call it usury if you want to. But anyway, my point is, income taxes. They exist everywhere, for the most part, unless you live in like an oil-rich nation in the Middle East. And they are pretty darn good to pay if you like taxes. And if you don't like taxes, then you can avoid them. Google your local jurisdiction and how it works. Or just, you know, look into it. Look into it. That's where today's video ends. Earn more money. It's good for you. Yeah, earn more money. It's good for you. I like that as a slogan. And yeah, in case you're curious, the series will continue. Like I'm going to be doing like maybe 3 or 4 of these in the next few days. So if you want to learn about inflation and interest rates and stuff like that, I want to help inform people without the usual nonsense of like, haha, here's my plan down below that costs $300 that will make you rich. No, this is just a video. I hope this video makes you, when you go into work or if you're in work right now, hopefully this encourages you to earn more and go out there and get the world, you know, grab the world by anything you'd like to grab it onto. What the world would consensually agree with you grabbing it by. Anyway, thank you very much for watching. Third channel. Good. I do care about you. And I care about this series for some reason. So goodbye.